thank you all for joining me on this webinar as we talk about telecom infrastructure services market expectations through 2027. You'll hear me refer to the telecom infrastructure services market as TIS throughout the presentation. We'll start with setting up today's agenda. So today we'll start by going through some of the TIS market growth drivers and detractors, and we'll also take a look at how 2022 ended up and what drove the significant growth in that year and what that portends for the future. Then we'll go through the market segmentation forecast, which include regional forecast, segment breakdown, breakdown by CSP tier 1, 2, and 3, as well as a breakdown of the different players within the market. So the telcos, cablecos, and the hyperscalers. And then we'll end by talking about the TIS vendor landscape, who's capitalizing on shifting market trends and shifting market dynamics, and how geopolitics comes into play in the market. Then we'll have time at the end for some Q&A. So I'm the presenter. I'm Michael Soper. I'm a telecom senior analyst here at TVR. I've been covering the TIS market for about a dozen years now. I lead our telecom infrastructure services portfolio, which includes the global TIS market forecasts on which this presentation is based. We also have a TIS vendor benchmark. We have a TIS vendor margin benchmark, as well as a forecast dedicated to the North America market, which actually just published today. First, I do want to level set on our taxonomy for TIS. So we break down TIS into 4 primary segments: the deployment, maintenance, professional, and managed services markets. And then there are subsegments within those that we'll touch on during the course of the presentation. Just to so everyone is able to be on the same page. So our TIS forecast includes all the external spend, both CapEx and OpEx, on services by CSPs. And when we say CSPs, that includes telcos, cablecos, and a select group of hyperscalers that I'll delve into. And all that spend on or related to communications and IT infrastructure. One thing to note is that pay TV satellite companies, companies like Dish Network, they're included in the cable code segment for the purposes of this report. The hyperscalers that we cover, whose spend is included in the forecast data, Microsoft, Alphabet, Meta, Amazon, and Apple, as well as Rakuten out of Japan. And we consider the hyperscalers to be tier 1 CSPs due to the size and scope of their digital businesses. And the spend that we include from the hyperscalers in TIS is really only their spend related to network infrastructure initiatives. So their cloud infrastructure spend, that's dedicated to their cloud services business, is not included. And then the last note on taxonomy is that the deployment services does not include aspects of civil works, some aspects of site development, things like land and real estate development, site equipment like backup generators and physical security and power. All right. So first, I'd like to start out by going through some of the key growth drivers and growth detractors, of which there are many in the market. But we'll only cover a few here, and more will be mentioned throughout the course of the report. So last year, we saw in 2022 that the peak spend in U.S. and China on 5G enabled the TIS market to grow pretty strongly in 2022. But we expect the investment in these countries to fall significantly in 2023, which will cause the TIS market to enter a 2-year period of decline. And that won't be offset by some of the growth factors in the market, especially the advent of 5G RAN deployments in India. We do expect the market to recover during the course of the forecast period in 2025 as government stimulus, which is primarily aimed at two things: rolling out 5G for economic and national security purposes, and bringing broadband internet speeds to underserved or unserved areas within various countries. There's a third area that government stimulus is aimed at, and that's replacing existing gear that is from untrusted vendors with that from trusted vendors. That is somewhat less spend, but it still amounts to billions of dollars. And the government spend in the telecom market itself is tens of billions of dollars. And obviously a portion of that will go towards GIS. And so we've factored that into our growth forecast. So as I mentioned, one of the key growth drivers is 5G coverage rollouts in India. And that also extends to some of the other developing markets that are deploying 5G somewhat later than US, China, some of the early adopter markets in Europe. But we are also seeing Europe on deploying 5G on kind of a staggered basis. So a lot of the deployments in even developed European markets will come later on in the forecast period. Another one of the growth drivers is fiber access deployments, and that ties in pretty closely with government stimulus, because a lot of the government stimulus is focused on, giving people access to fast broadband speeds that can somewhat only be achieved by fiber access. It's a future-proof technology. It doesn't have the types of capacity constraints that maybe a fixed wireless access connection could have. And so we see governments focusing on the fiber deployments with their subsidies. Another one of the growth drivers, especially later in the forecast period, is open and virtualized RAN deployments. We certainly see select open vRAN deployments right now. There's certainly a lot of trials in the market. It is absolutely an immature technology at this point, and the TIS spend associated with it is not very heavy at this point. But as the forecast, as the ecosystem around open vRAN matures, we certainly expect more operators to adopt the technology. And we especially see this impact coming in 2026, 2027, in the second half of this decade. And then that extends beyond the forecast period. And what's really driving the increase in TIS spend associated with open vRAN is the complexity of the technology. Certainly some of the early adopters have noted the heavy investment that's required in professional services, especially systems integration for deploying open vRAN. Many of these growth drivers are weighed or outweighed by some of the growth detractors. There's a host of macroeconomic issues that are significantly impacting the telcos and the cable cos and even the hyperscalers who are facing some of the slowdowns in the market. Things like stagflation, interest rate normalization, difficulty accessing capital. These types of macroeconomic issues, they're impacting CSPs across the spectrum, especially some of the smaller tier 2, tier 3 operators. If they have a more difficult time accessing capital, they're much less likely to be able to roll out new technologies like 5G, and that delays their spend. And then that can also lead to quite a bit of CSP restructuring, consolidation in the market, whereby the tier 2s and tier 3s seek to be acquired by some of the tier 1s, and that puts pressure as it shrinks the total addressable market that vendors can supply to. Excuse me. And we're also likely to see quite a few bankruptcies of some of the smaller players over the course of the forecast period, and that certainly weighs on spend. There's also legacy decommissioning to take into account. That's the removal from the field of legacy technologies. especially 3G. We're seeing a lot of that at this point, and that's only going to intensify over the course of the forecast period as that spreads to more developing markets. The other thing to note on the growth detractors is the heavy impact of migration to the cloud, increasing use of automation, AI, and ML. While these things will take TIS to implement, their overall impact on the market is a negative. It will result in cost savings, especially on the OpEx side for the CSPs. And so they're certainly interested in deploying those technologies. And we'll dive into these more as we go. So first we'll go into the market forecast by segment, starting with the deployment services market. So I mentioned, so the deployment services market is post-peak at this point. We don't see it recovering the level of spend that it achieved in 2022, even by the end of the forecast period. And that's not to say there aren't pockets of growth, but the fact that the accelerated and aggressive 5G RAN rollouts in China and the U.S. both peaked in 2022 means the market will have a negative CAGR over the course of the forecast. In the U.S., especially last year, the Tier 1 CSPs really pulled forward their C-band deployments. Verizon, AT&T, and T-Mobile completed most of its 5G rollout in the 2.5 gigahertz band. One kind of saving grace in the deployment market is that the U.S. is still going to have quite elevated spend relative to historical levels. That's because of the government funds that are flowing into the market, and that's really hitting in 2024, ramping up in 2025, and that will provide the opportunity for TIS vendors to capitalize on the expansion of fiber services into new markets. The cable cos, the telcos, they'll be taking part in funds like RDOF and BEAD and getting billions of dollars from that, a lot of which will go towards TIS. There are also other pockets of growth, such as optical transport. So the 5G RAN projects that are occurring throughout the world, they're driving CSPs to invest in their optical transport for things like front haul, mid haul, and back haul. They're also providing opportunities for deployments in edge infrastructure and upgrades in the core network. And so there's a whole host of vendors that can capitalize on these areas. We do see some, one of the subsegments within deployment is site location and construction services. And we see a quite negative long-term outlook for this market. So what the CSPs are really focusing on adding incremental capacity to existing macro sites. While there's certainly some spectrum bands that will require new site location and construction services, really what's happening in the 5G cycle is software upgrades or adding new radios to existing sites. In the maintenance services market, by the end of the forecast period, we foresee maintenance spend entering gradual decline. While there is room to grow over the next several years as operators are supporting both their LTE and their 5G infrastructure, as well as 3G in a lot of cases, as they decommission and as more consolidation happens in the market, we foresee the overall addressable market and maintenance to decline. And that will really be kind of a perpetual thing if we look beyond the forecast period. That's part of this presentation. There are some other technological changes that are also weighing on the maintenance services market. Things like automation, AI, ML, that will make the provision of maintenance much more efficient. We also have greater introduction of white box hardware, especially associated with Open vRAN, as that equipment enters the field where there's much lower need for on-site deployments because that infrastructure is equipped with less intelligence. The intelligence is much more centralized. So then you won't need as many truck rolls. You won't need to have on-site personnel as much as in previous generations of technology. The professional services market is an especially bright spot. So we foresee this to be the fastest growing segment due to a number of factors, certainly the proliferation of 5G, all the digital transformation projects that CSPs are undergoing, and then, as we talked about earlier, the introduction of more complex technologies such as Open vRAN. So, So what we have the one of the components of the professional services market is network infrastructure integration, and that follows along the path of 5G related infrastructure deployments. So while that is likely past its peak, as the U.S. and China are both post-peak in terms of 5G RAN deployments, we're still going to see elevated levels as fiber deployment to serve underserved and unserved communities is deployed globally. We also have quite a few digital transformation related endeavors, and that is really propping up the growth in the middle years of the forecast period. As operators look to monetize their 5G networks, they'll leverage consulting services from TIS vendors, optimization services, OSS, BSS integration as they upgrade those systems to take advantage of new technologies. And they're also going to be leveraging professional services for things like cloud migration as more IT and network applications are moved to the cloud. That will require services from companies like Tech Mahindra, Accenture, IBM, et cetera. And then later in the forecast period, as we discussed before, we see more Open vRAN coming online, which is where the growth really starts to ramp up in 2026 and 2027. And the complexity, as we talked about, of Open vRAN results in higher project costs, especially compared to historical levels. And lastly, in the managed services market, we'll touch on this quickly. The managed services market is an interesting one. There are two competing forces at play here. So right now we see a significant decline in the demand for outsourcing services, which is especially in network outsourcing. IT outsourcing is a bit of a different animal, but in network outsourcing, we have both the vendors and the operators are not keen. Vendors are not keen to take on this network outsourcing business for the most part because it is extremely low margin, has quite a long path to profitability if it ever gets there. And then the CSPs, they are okay with re-insourcing this in a lot of cases. They're not gaining the expected cost savings that they expected when they first outsourced their network. So as that market declines, we have outtasking demand eventually outweighing this decline. So what we see is CSPs increasingly wanting to outtask their OSS, BSS, their security, a lot of their applications so that they can focus their human and technical resources on their core businesses. And vendors are increasingly innovating to provide the CSPs with access to different subscription services and providing them enhanced insights and cost savings, via different nascent technologies like AI and analytics and automation. And so that's a significant growing part of the market that eventually causes the managed services market to reignite growth towards the end of the forecast. We'll speak a little bit about the different CSP types. So as I talked about earlier, so there's the telcos, there's the cable cos, and the hyperscalers that we segment by. The telcos are declining through most of the forecast period They begin to recover towards the end of the forecast. A lot of the decline is due to some of the broad 5G coverage deployments, especially in the U.S. and China. The 5G coverage deployments in India are not really able to make up for that during the forecast. Similarly, the government stimulus that's rolling into the market will also not be able to make up for some of the decline in spend on these big 5G coverage rollouts. There are a few things that are really weighing down some unavoidable trends that's weighing down on the telco spend, and that's things like industry consolidation, some of the legacy infrastructure rationalization or decommissioning that we spoke about, and then the cost savings that the CSPs are able to garner from technologies like automation and cloudification, so that they're able to start spending less money on their maintenance services and managed services. The other thing is throughout the forecast, we have legacy infrastructure. As it's decommissioned, it's being replaced with some of these new architecture technologies as those leverage virtualization, cloudification, greater automation. And so the product attached TIS spend that's generally associated with this new hardware is going to decline compared to earlier generations of technologies. If we look at cable cos, there is a period of growth over the next 3 years, and that is largely due to some of the trends in the U.S., especially the influx of government funds coming into the market. The cable cos will be able to take great advantage of the funds to build out their footprints to unserved and underserved areas, providing new fiber services that otherwise would not have been economical for them to deploy. And so they'll be capitalizing on that over the next few years. The U.S. is also providing a couple other growth catalysts for the cable category segment, and that is Dish Network's cellular network build, its greenfield build, which is having varying degrees of success. And then the greenfield cellular network builds of cable cos, specifically Comcast and Charter. Those are not huge dollar value, but they certainly count, and the cable co TIS market is relatively much smaller compared to the other CSP types. For the hyperscalers, so as I mentioned, we only include 6 large hyperscalers. That's Alphabet, Amazon, Apple, Meta, Microsoft, and Rakuten. We only include their TIS spend in this report. And the hyperscalers, they generally spend most of their telco-related dollars on submarine and terrestrial optical transport, especially for data center interconnect. And that will continue to underpin their network investment and their spend on TIS over the forecast period. But we do have increasing spend on their part on things like mobile core, backhaul, and especially access-related investments. And we expect that to ramp up throughout the forecast period. They are increasingly interested in owning the network and even owning the last mile in a lot of cases. Certainly one of the more high-profile projects is Google Fiber and their associated web pass business. So Google Fiber, after a period of not really spending, they are branching out into new markets and expanding their footprint in markets where they had already existed. We also have Rakuten's mobile network built in Japan. That has been quite a big driver of spend over the last few years, and that will extend into 2023. But as of 2024, the Rakuten's 5G network is expected to be substantially completed. And so their TIS spend over the next few years will be roughly flat with 2022. One thing to note is that we don't cover China's hyperscalers, Alibaba, Baidu, and Tencent in this research, and that is primarily because the state-owned telcos are much more set up to capture the 5G opportunity and other connectivity opportunities in China. And the hyperscalers are largely going to be leveraging those state-owned telco investments for their own initiatives. So their spend is relatively less than the six covered here. In terms of regional forecasts, we spoke about this a little bit, but the TIS spend in North America, it's going to decline, but relative to historic levels, it will remain elevated, and that's partially due to the extended 5G spend cycle, which occurred with kind of the staggered nature of the spectrum auction schedule in the U.S. and its availability progression. And by that, I mean the different portions of the C-band that are becoming available for the telcos to use over the next couple of years and starting last year. We also have the significant government stimulus that will support the TIS spend volume, and especially in the U.S. during the forecast period. And that's primarily for fiber, somewhat for fixed wireless access rollouts for closing the digital divide. And the U.S. has also earmarked a couple $2 billion in funds for ripping out and replacing equipment from China-based vendors at the Tier 3, especially the Tier 3 operators who largely leverage Huawei. There is a bit of a funding gap because that will cost $2 to $3 billion more than what has been allocated by the government. We do expect the government to appropriate the additional funds to fully replace the Huawei and ZTE equipment that exists in the field at this point. There's a little bit of a different story in Canada. They trail the U.S. in 5G deployment by around 12 to 18 months. They have been focusing their 5G deployments on the metro areas in the country, but they'll be building out more coverage and capacity as more spectrum becomes available, especially in 4Q this year when the 3.8 auction occurs. And right now, Canada, which is also requiring the CSPs to remove their equipment from China-based vendors, they have, at least to date, they have said they will not be covering the bill for that. So the CSPs will be on the hook to replace the equipment from Huawei and ZTE. Looking at the CALA Latin America market, we see the macroeconomic disruption that's occurring globally, things like inflation, that's really going to disrupt the CALA's, Latin America's recovery, which started in 2021, extended into 2022, and now we're going to see a bit of a decline in 2023. But after that, there are several growth catalysts in the region. And so one of the things is the new spectrum availability, especially in markets like Brazil. That's going to help the CSPs begin or really expand their 5G rollouts. And a lot of that has already begun to occur in countries like Brazil, Mexico, Uruguay, some of the more developed countries in the Caribbean. And we expect that to extend to more countries across the region during the forecast period. And that's why it's largely growth beyond 2023. EMEA, we foresee to be the fastest growing region over the forecast period. As I mentioned earlier, there's kind of a staggered 5G deployment schedule, if you will, in Europe and in the countries in EMEA. You know, some of the more advanced EMEA countries like UAE, Saudi Arabia, South Africa, they've already invested quite heavily in 5G, but there's still a massive opportunity, even for LTE investment in places like in most of the countries in Africa, and then the 5G opportunity to spread beyond some of those early adopters that I just mentioned. And then in Europe, we're looking at a period of sustained gradual growth. There are a few regulatory issues that the CSPs in Europe have had to deal with, spectrum allocation delays, a somewhat hostile regulatory environment, kind of CSP consolidation that's been a bit up in the air. And as those things resolve themselves, we expect spend to grow over the forecast period. We'll also see quite a bit of government support in Europe for things like deploying 5G as part of national security initiatives, stimulus for rolling out new fiber access networks, and especially for replacing gear from China-based vendors. That's become quite a big opportunity for a lot of the Western-based vendors throughout Europe. And then lastly, to talk about APAC. So it's a bit of a different story between China and the rest of APAC. So China is the highest spending country in APAC. And in 2022, we saw China CSPs really ramp up spend as they continue to deploy their 5G infrastructure. But now China's entered the densification phase of the 5G cycle, and their spending is expected to decline through 2026, at which point we expect it to sort of normalize around a $19 billion level. Certainly the Western-based vendors have been marginalized in that country in favor of domestic vendors. And right now we see domestic vendors receiving about 95% of China's TIS spend. In the rest of APAC, most of the developed countries have completed their 5G coverage deployments, and they've shifted to 5G densification, and other 5G monetization activities around digital transformation, upgrading their 5G cores if they haven't already, and improving their network backbones. One area that is a much different story is India. India, we expect to grow strongly, especially in 2023, and maintain this level in 2024. And that's primarily led by the aggressive 5G deployments of Reliance Jio and Bharti Airtel. The 5G spend in the market really started in the second half of last year, but the ramp is occurring this year, and it will maintain those high levels in 2024. India's 5G rollout is possibly the fastest that's occurred in the world. So it's kind of a quick hit over the next 2 years, and then spend begins to decline again. The last segmentation of spend that I'd like to go through is the CSP tiers. So what we have here is we have relatively consistent growth for the tier 1 CSPs. A lot of that is due to the hyperscalers are included in the tier 1 CSP segment because of their spend levels, because of how massive they are. And so that's why we include them in the tier 1 segment. In the tier 2 and 3, we have a fairly consistent declining growth story, and that's because these companies are much less well-resourced, less able to compete in the market with the tier 1s. As we talked about at the beginning of the presentation, their access to capital is increasingly restricted. They are dealing with negative effects from interest rate normalization. They're having to restructure. Sometime throughout the forecast, we expect bankruptcy filings, and we expect especially quite a bit of consolidation. And so that consolidation leads to more concentration in the tier 1 CSP segment and lower spend in the other segments. And then lastly, I just want to touch on the vendor landscape. So this graph depicts the market share levels in 2022. And this is a global view, so it doesn't show the full picture of what's going on. It's kind of distorted because The vendors that are based in China, so Huawei, ZTE, China Communication Services, which is a pure play TIS player that almost entirely serves the Chinese market, they are doing quite well in China, where the government directs the CSPs to leverage these companies for equipment and TIS. But then outside that market, they are becoming much more marginalized, especially Huawei, which had a huge presence in Europe especially. And so we have companies like Ericsson, Nokia, Samsung, which is not one of the top 10 suppliers on here, but is part of other suppliers. These companies are increasingly taking share from Huawei and ZTE in more of the developed markets. And we expect that that trend to continue in 2023, especially as the Indian service providers roll out 5G. While the Indian players leverage, especially Bharti Airtel and Vodafone Idea leveraged Huawei and ZTE as part of their 4G rollouts, they are unable to do so for 5G. And so all that business has gone to Samsung, Ericsson, Nokia. There are other vendors that are benefiting from this trend in geopolitics, especially in the optical space and the IP routing space. Ciena, Cisco, Juniper, Fujitsu, NEC. They're all able to gain market share at the expense of the China-based players, at least outside of China. All right, and with that, we can open up for Q&A. All right, I am seeing some questions over here. Okay. The first question is, would you characterize the private 5G market growth opportunity more positively in the broader public 5G market growth cited as having peaked? The answer to that is yes, certainly, and we covered that in our private cellular networks portfolio. I will note that the private cellular networks spend on services is not included as part of this report. This forecast is focused on the public 5G market, and so any efforts by either the vendors or the CSPs to deploy private 5G networks is a separate category, and we do cover that market extensively. Another question here, how are geopolitics impacting China's TIS market share in China? So within China itself, I know we talked about outside China, but within China, the Chinese vendors are really gobbling up the market. There was a tender recently where Ericsson and Nokia were still able to win some share, but if you compare the share of spend that's gone to Ericsson and Nokia in the 5G cycle with the share of spend that went to them in the 4G cycle, it's a vast difference. I think both vendors understand that their business in China is likely in gradual decline, especially over the long term anyways, especially as the government is directing the CSPs to leverage homegrown domestic vendors as much as possible. Next question I have here is, what is the expected impact of the changing market dynamics on TIS vendor margins? So it's kind of a mixed bag. So over the short term, the next few years, I view the TIS margin outlook as somewhat negative, and a lot of that is due to the shift in spend that's going away from the developed markets and towards developing markets, especially in India, where margins, especially on TIS, are kind of notoriously low. And as the U.S. Coverage deployments are largely complete, and the U.S. is the highest margin region, then overall TIS margins will be going down. Over in the long term, things like AI and automation and cloudification, and as the segment mix shifts towards professional services, we do expect TIS margins to improve over the long term as the vendors are able to leverage fewer human resources, make fewer trips on site to cell sites or what have you, then that's a positive long-term trend for vendor margins. With that, Haley, unless you see any more here, I think that is all the questions we have.
Awesome. Thanks, Mike. And thank you, everybody, for your questions and for joining us. If you have any follow-up questions, feel free to reach out to Mike directly. It looks like there is one more that just popped in. I'll let you take that before closing it.
Great, thank you. What operators do you see most vulnerable from restructuring/consolidation? So certainly some of the tier 2s and tier 3s, I think that's the broad answer. If I'm looking at the U.S., which has a highly sort of regional, local player-based landscape. So the smaller operators, the tier 2s and tier 3s, a lot of them family-owned, stuff like that, they're certainly vulnerable. And it's not a bad idea for them to cash out to a Verizon, to a T-Mobile. And then I think one of the interesting cases is certainly Dish Network. What Dish does with their cellular network, if they're able to meet the last couple of their mandates from the government, and then whether or not they're able to keep their subscriber base, which has just steadily eroded over the last 3 years since the acquisition closed. I think they're an interesting case. Certainly the regulatory environment plays a role. We don't see the tier 1s being able to consolidate in markets like Canada or the US. It looks like in the UK that they've come to the understanding that they don't need so many large players, and that there will be consolidation there, and I think that's likely to pass. And I think that's probably going to spread to other European markets. So where maybe a couple of the smaller tier 1s or larger tier 2s, they're able to combine and not face too many regulatory obstructions.